Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index managing to hold on to gains of 0.9%. Hang Seng managing to hold on to gains of 3.
Resistance 24,878, which is the 61.8% retracement. 24,800, 54,170, 54,200, just about finding its feet.
I believe there should be a delta growth in this festive time.
We are looking for obviously a significant delta driven by volumes.
So I'm quite confident that the measures taken so far are sufficient to lead to a growth revival.
And it will genuinely actually increase the money in the hands of the customer. Therefore, discretionary spends will go up.
For the markets, we saw a sharp fall from the opening highs.
You've got huge benefits on water, which has come down from 18% to 5%.
It's always good to operate, between 3 to 5% kind of a band, because that's manageable for most companies.
Nifty, it came off from the highs, did see some recovery and is managing to be around the 24,685 mark, very close to the 24,700 level.
Well, that was the day so far, and it's been quite a momentous week for our markets. With the GST overhaul, and markets have been slowly climbing higher. We haven't seen big gangbuster moves, but week to date, we're still up close to about 1 1/3 of a percentage point. So then let's pull up that 5-day chart. And even today, things have been on the quieter front, though in the last 1-2 hours, we have seen the markets pick up. 1 hour to go to wrap up the day and the week.
Wrap up the day and the week, and that's exactly right. And if you look at the weekly gains, like we're saying, that you look at the Nifty, you feel nothing's changing, but the week incrementally is positive.
It's positive, yeah.
And if you look at mid-caps, and the mid-cap index has done even better. If you're looking at individual names, say a Mahindra & Mahindra, for example, then even that single stock, M&M, for instance, which is, again, the Nifty winner, this week Mahindra & Mahindra has given more than 11% gain. So it's been more focused on individual beneficiaries and stocks, not showing up so much at the market-wide level, the GST impact, but it's there. It is palpable. Of course, we will keep you completely covered over the next 60-odd minutes, take you through the end of closing bell. With me is, of course, Rima, and we have Nigel joining in. Prashant joins in a bit. Nigel, not too bad, right? I mean, even from today's lows, we've managed to see some recovery.
Actually good today, because you have a lot of stocks in the broader markets that are doing well, and the broader markets itself are outperforming. That's what will make a lot of portfolios look good. So if you look at Brain B, is a stock that's bombed out, that's up in trade. GMDC saw a sharp correction from around that 550 mark, went down to around 400 rupees. That as well is popped up in trade. Cross is up close to around 12%, so big move out there. MobiWick, we had highlighted the stock earlier. That as well is doing well, and something's going on with Swiggy. Just take a look at that stock. There's delivery-based buying that we're seeing on that one. It's currently at the high point of the day. There's constant argument whether or not that valuation gap with Eternal will narrow out. Well, that one, in fact, is doing well in today's trading session, currently at around 440 rupees. So interesting movement on a couple of those stocks. Well, guys, let's get going with the show then.
Absolutely. So let's run through what we've got lined up over the next hour or so. The market has become a buy on dips today. Several times the Nifty slipped into red territory, but the buyers have come in, and that's what's playing out today as well. So we'll talk about that, and we'll talk about the big movers of the rally. In fact, if you look at it, the FMCG index and the IT index, they're the ones that are still dragging. But there's a recovery continuing in many of the auto names, and the Nifty above 24,700. We'll, of course, talk about the reason why those IT stocks are down, and that's because of a British company and, the kind of commentary that they have put out. Also in focus, BSE, following the shift in the weekly expiry. How will this impact volumes in the market, and what are the factors at play now? We'll talk about that. Food delivery companies, aggregators, Eternal and Swiggy, surging on the back of bullish expectations coming through from a Motilal Oswal note. We will get you the details in a bit as well.
All right, let's find out how you should position yourself in the last hour of trade. We've got Mitesh Thakkar from Bonanza Portfolio joining in as always. Mitesh, wrap up the day for us, your thoughts, the trends that you've observed, and even the action over the last couple of days, and how does it position us for next week?
Good afternoon, Rima. What I'm observing is the lack of trend, actually.
See, the market on the daily and the weekly charts, if you look at the indicators which suggest directional movement or volatility, they're all turning flat. So I don't think this is a market, where you want to explore too much of index trading. But stock-specific trades is the way to approach, and that's what we have maintained for last few days. Right now, I have a buy on Chola Finance. That's a stock, which after correction is reversing. So recommend a buy here with the stock below 1465 for targets of around 1525 or thereabouts on the upside. And if you look at the IT, that's actually looking a bit weak. So sell on HCL Tech could be interesting. It's making new lows, slightly oversold, but the directional bias is negative. So if it gives a mild pullback, say around 1430, sell here with a stop at about 1450 and look for a 1390 kind of a target.
Okay. Let's, in fact, just dwell a little bit more on the IT. In the early part of the day, there was a lot of volatility in the stock price. At one point of time, the Nifty IT index went down nearly 2.5%. And that's because of an erroneous flash by, some of the publications where they spoke about the tariff, the Indian IT export services getting possibly under Trump's tariff watch. That was, quickly denied, and you saw the stocks recover. But separately, there is actually news and there is negative news. There is this company called Endava. It's a mid-cap global IT company. It competes with the Indian IT services in various deals. They came out with their Q4 FY25 numbers, and it was a disappointing set of numbers, which is why the Endava stock price tanked nearly 30%. Their guidance is also weak. The company is saying in Q1 FY26, the upcoming quarter, revenues will fall 5 to 6%. For the full year, they're talking about a revenue decline of -1.5% to +0.5%. What's the problem? So from the commentary, what they're saying is because AI is changing so rapidly, customers are waiting before they commit to any sort of an investment or any project. So for example, if you think that today, the project you're going to give is going to give you 20% productivity benefits, the customers are thinking, well, if I just wait 6 months more with the kind of rapid advancements, maybe the productivity benefit will be 30%. So that's the reason why companies are seeing deal wins. Their AI pipeline is growing, but it's not converting into deals. And companies themselves are investing heavily into AI. So Endava spoke about making that investment into AI and also passing on productivity benefits, which basically means that there could be a margin hit, which is something we started seeing already. Companies talking about or investors fearing on that front. So which is why the Indian IT companies are under pressure because of, there could be multiple reasons, but this is one that's come through from Endava.
So this means that if I'm a, large, a US bank or any entity which is, outsourcing some part of my services, I could hold back discretionary
They're holding back.
Thinking that if Rima, is giving me X amount of benefit today with more advancement in AI, it could be higher. So why not wait?
So why not wait? It's like 1 year back or 2 years back, you had ChatGPT 1, right? Yeah. Instead of committing to a 5 year with ChatGPT 1, wait for you've got ChatGPT 5, right? In a couple of years. So that's the thing that's happening. It's changing so rapidly. So customers are holding on to their spends right now. So which is why there is pipeline. But there is no revenue.
Just, guys, hi, good afternoon.
Hi.
There's one thing. So this is not, this guidance came this morning or was it? Yes.
Yesterday. Stock was down 30%.
So the general understanding, and I just walked in, but this is, you're saying the stock fall is related to this, not the fake news which we busted, which is...
I think there was a trading impact.
This was yesterday.
This was yesterday.
Yeah. There was a trading impact of the fake news of Mr. Trump and what he's doing with software exports, which is completely fake, completely dismissed. And we put out the clarification as well. So there was a trading sort of a blip. But
because I spoke to somebody, he said, well, you guys posted a clarification, but stocks are still down.
Yes, they are.
That may be, the news in any way is not very good in that sense.
Yeah. So I was talking to a couple of IT analysts, and they're saying, I just asked them, I said, do you think it's possible that Indian IT services will get tariffed? And they said, no, it's unlikely. If Trump really wants to make a move, and hurt Indian IT or whatever the word may be, he said there is a possibility he could look to increase the localization requirement. In his first term, he introduced a minimum localization of 65%. Before that, it was understood it should be 40-45%, but there was no rule, is what I've gathered. So he brought in 65%, and there was a scramble. And because the talent offshore is so much, onshore is so much more expensive than the talent here, there was a margin pressure on Indian IT companies. Therefore, there was a scramble. Anyway, H-1B visa rules had gotten tightened. So therefore, if he has to maybe do something, maybe he will increase the localization, say make it 75%, hire more people here in US.
Which is why the overall disenchantment and the pressure on IT stocks is very, very understandable, because you have no idea what's happening next with the US till there is some sign of progress or a thaw or a breakthrough. It's an edgy space. Let's actually take this up with Dharmesh Kant, Head of Research at Chola Securities. Dharmesh, hi, good afternoon. We have lots to discuss, but let's start with IT. Because, there are all of these issues at play, including this AI news that Rima spoke of. Earlier this week, we had some brokers actually put out optimistic calls. I think CLSA was definitely one of them, saying tactically, why don't, it's a good time to maybe buy into large cap IT. But would you be in that camp at all, given the uncertainty?
Yeah, good afternoon, Survi. I mean, whichever way you look at IT companies, it's plagued with, bad news or, flows are not very conducive to their business growth environment. And I hope and pray Mr. Trump has not seen that news flow that he can also tax IT services. In case if that has to happen, it will be, a big negative. I don't think so it will happen. As Rima was highlighting, it will be more to do onshore kind of a job. But again, even if that is put into place, it would be again operating margin dilutive and the margins will be impacted. Anyways, they are struggling to maintain the margins because they are not getting the pricing right there in the US. So pricing is under pressure, margins are likely to come under pressure. The only way to look at IT companies right now is to look into the companies which are into services of technology and application oriented, like ERP, AI. Let the product be developed by some other company, whichever version of the product comes through. That should not be the criteria for the companies, IT companies who are serving them. If they are into the supply chain of product development, then they are getting the business. And there I think Coforge, Persistent System and companies like that are doing a pretty decent job, and such falls can be used to accumulate them. Large cap IT companies, jury is still out, and I think this entire year would be very difficult for them to negotiate to. So we are staying away from all large cap IT companies. In mid cap, select IT companies are looking attractive, and their Coforge, Persistent stands tall along with Signity Technologies.
Okay, all right. Dharmesh, good to see you in. Wanted your view on some of these stock market plays, and what comes top of mind is the exchange, BSE. Buzzing in today's trading session. Yesterday they played out. After a while, they had their weekly expiry on a Thursday. Vamakshi joins us to tell us why is BSE buzzing today. Vama, before we get to that, a very, very happy birthday to you. Wishing you all the best, prosperity, happiness, and we look forward to the party later this evening. But first on BSE.
Well, thank you so much, Nigel. I think you've gotten the party for today, but let's now focus in on BSE then. NSE and BSE from this week onwards have had their expiry switch. So NSE now has Tuesday expiry and BSE now has the Thursday expiry. Now let's see how the market share for both of these exchanges panned out this week. Now on Tuesday, which is NSE's expiry, NSE had a market share of 88% while BSE had 12%. On Thursday, which is now BSE's expiry, BSE had a market share of 56% and NSE had a market share of almost 44%. Now let's look at how BSE's market share has trended over the previous expiries, which were on Tuesday, that is from 29th of July to 26th of August. The trend will come up for you. The average market share of BSE on these last 5 expiries has ranged at 52%. Now with 56% market share, which came on 4th of September, that is yesterday, this is the highest ever market share that BSE has ever commanded on a day. So that is why, that's a big bounce is coming in today. But apart from that, when we look at the premium turnover itself, the average premium turnover on the previous 5 Tuesdays has been at 35,442 crores, and on Thursday, that is yesterday, the premium turnover surged to 49,265 crore, an uptick of almost 40% as compared to this average. And in fact, this premium turnover is one of the highest that BSE has seen since May 27th, 2025. So good uptick in the market share as well as the actual premium turnover bodes well for BSE. Resultantly, the stock is flying today.
Okay, all right, Bama. We'll chat post market hours and you can tell us where exactly is the venue to party. Thanks a lot, Bama, for telling us about BSE. Dharmesh, we'll inform you as well about the venue, but for the time being, give us your view on BSE.
Yeah, good afternoon, Nigel. I mean, see, exchanges have been under a lot of volatility of late, and BSE, after rallying so hard, is saying some tough days as well as bounce backs. So, what we are recommending to our clients is go for a basket buy. BSE, MCX, NSDL, CDSL all put together. And if you are having a horizon of 3 years, 5 years kind of a long-term horizon, then there's, I mean, still the valuations are justifiable. And we do see some upside coming in there. However, having said that, one has to be very clear, the day NSE gets listed, this entire space will come in for resetting. And let's see how the pricing goes about. As of now, there's still a huge discount between NSE grey market prices and BSE price, the prevailing market price. So our hope is that somewhere in between it's likely to be settled. So time-wise correction, we will still see in BSE. There would be some pop-up days, but the structural uptrend is unlikely for next 1.5 or 2 years or so.
Dhamesh, as we began the week, we were just, began the show, we were just recapping the big moves seen this week. So M&M's right on top, as Surbhi said, 11.5% higher. Then you've got a Tata Steel, 8.3, Eicher Motors, 8, Bajaj Finance, 6.5, Hero MotoCorp, 5.5, Hindalco, Bajaj Auto, also with gains of more than 5%. So broadly, it's your metals, it's your auto names, and even then the consumer finance names, Bajaj Finance and FinServ. Any of these large caps on your buy list at this juncture you would be comfortable buying?
Yeah, good afternoon, Rima. We are still continuing with M&M buy call. So we have initiated way back, couple of months back. Even there was some news flow surrounding that the GST will go up on EV vehicles. Fortunately, that did not happen. And that was our call also on M&M that it's not going to happen, and they have to push the EV vehicle in space. If you look at the August month numbers, in spite of GST announcement being through, the numbers were pretty strong for the farm equipment segment. And now with GST cut coming into play, there's a further boost to that. So M&M stands out a clear winner of this. Hero MotoCorp is the second in place, which we are liking. The upside trajectory will still be there. October, the month would be the bumper month for all these automobile companies. That is what the dealer checks are suggesting to us. And post that, we'll see where the price is standing, and for medium-term outlook, whether one should be booking profit or staying invested. So these are the calls. Basically, we are focusing more on the automobile space right now from the consumption theme. And BFC does look attractive. Eventually, wherever you consume, and if you are consuming by taking a grade, whether it is consumer durable automobiles, so they are the ones who are likely to benefit. And there we are standing with the market leader, and that is Bajaj Finance. So all these calls are tactical in nature for a couple of months kind of a perspective, because valuations to our mind is now almost on the peak level. So 10-5% more upside, and then we would be looking at taking the profits.
Okay. All right. Let's now talk about weekend plans. Well, no, let's talk about stocks that involve weekend plans. I'm talking about Eternal and Swiggy. There's a Motilal Oswal note, and Motilal seems to be fairly optimistic on both. And I think both stocks are a buy for the brokerage as well. Let's bring in Mangalam to understand why. Mangalam?
Well, a couple of things have actually taken place for Eternal and Swiggy over the last few trading sessions. If you look at it, in the last 3 days, two pieces of news have come. One on the upside, where Zomato and Swiggy have actually gone ahead and increased their platform fees by about 15 to 20%. The second was the GST notice that has come in, or rather the GST rate rationalizations increased their overall tax liability by about 150 to 200 odd crores, because now they have to pay GST on food delivery as well, which was earlier a grey area, and now there is clarity. But having said that, despite this little news, Motilal Oswal believes that this is a time to buy Swiggy and Zomato. They have a target price of 560 on Swiggy and about 420 on Zomato. The reason why they say that is over the last few quarters, these companies have seen a perfect storm when it came to demand. But now they believe that this would result in a fair amount of tailwinds in the very near future. So much so that they've gone ahead and increased their growth estimates from 19 to 21% to about 21 to 23% in the food delivery business. And they've also increased their target multiple on the food delivery business from 27 times FY27 earnings EBITDA to about 35 times. So the multiple has increased, growth parameters have increased. And to the GST, they say that it will not impact their food delivery margins by any more than 0.2 to 0.5%. So that's not a major concern. Add to all of this, even the quick commerce business, they believe that peak of investments are over for all the companies. And going forward, they have actually brought forward their profitability estimates, and they believe that contribution margins will only increase from here on for both Blinkit as well as Instamart. So all these factors pointing in the right direction, and as a result of which, Eternal and Swiggy, both of them doing well today.
Okay, all right, got it. Mangalam, thanks very much. Let's ask Dharmesh. Dharmesh, which one? Swiggy, Zomato, or both, or neither?
So from consumption point of view, I would look at the price offering which they have, but from share market point of view, buying neither. I mean none. And the reasons are very simple. I do believe that this volume growth theory will go on, and if Motilal Oswal believes that GST will be absorbed, a part of it would be absorbed by the players in the offering, I mean, they can do so. But what I don't understand is when you raise the rating, I mean, if the valuation becomes very expensive, then how to justify the valuation? You go ahead with, changing the multiple from 27 to 35 times EBITDA. So that is what is, I mean, not understandable to my mind. Valuations are very high for both Eternal and Swiggy as well. Swiggy has still to come to profitability path. So we are avoiding it completely. Let the run continue. It may continue for some more time. But I don't think the valuations now looks justifiable from an investment perspective. For new fresh investment perspective, if you are holding it and you still believe in the story that the GMVs will double from here on in aggregate basis, you may continue to hold. But we are out of that cap.
Okay, all right. So that's Swiggy, Zomato. Very quickly, Dharmesh, one more stock that I had to ask you about because a lot of investors will wonder what to do now is Ola Electric. It's anything but straightforward, to understand what happens. The stock moved from 40 rupees to nearly 70 rupees. And today, suddenly it's down 7% again. What's the advice?
Yeah, I mean, it's quite bizarre to see the movements in Ola Electric, and suddenly people are realizing that this GST cut will make it less competitive as compared to ICE player, because now the differential stands only 13% as far as the GST outgo is concerned, and that's the cost of the bike. But for Ola Electric, the last quarter was not great one. If you look at the number of bikes being sold, around 68,000 bikes. And for them to break even, the run rate should go to on a PAT basis. I'm not talking about the operating profit basis. That, to our understanding, should be 5 lakh to 5 lakh 50,000 bikes per annum. And these are bikes which are being sold. This is not technology. So they have to sell the real bikes in the market, and that's a difficult challenge for them. The run rate, I mean, the last number also was less than 10,000 bikes a month. So I have my own doubts regarding when this will pan out. But people are giving it a benefit of doubt. If you just want to stay with this kind of a doubt play, you can go ahead. But we would be looking at it seriously only when, the monthly run rate is 50,000 or more bikes a month. And then it will make sense to look at Ola Electric from its long-term perspective. Because understand one thing, the battery capacity which they have set up, that is for 12 lakh bikes per annum. So still they would have a capacity to go to double their sales, and then the real profit will set up. As of now, we are avoiding this counter.
Very quickly, have you had a look at Urban Company and the valuations at 15,000 crore roughly? How is, is it attractive? Should one subscribe?
No, I have not looked at the IPO of that, so apologies for that.
Got that. Thank you, Dharmesh, for joining in. We will slip into a break on that note. We'll come back and touch base with Tushar Pradhan from Hexagon Partners. Stay tuned.
Okay, absolutely quiet on the indices. The Nifty is barely changed. 3 points up, 3 points down. Ditto for the sensex. Ditto for the bank Nifty as well. We need some excitement. That means we need Hormaz in the studio. Let's figure out what's on his buzzers list. Hormaz, over to you.
Well, it's the end of the week, so we'll bring you a weekly special for today's show. We're going to start off with GMDC, and the stock is up 27% this week. This is the best weekly performance that the stock has seen since January of 2022. And this week, we've already seen almost 6 crore shares that have changed hands on the stock. This is potentially the highest volume that the stock has seen in a year. In today's session itself, over 3 crore shares have changed hands. Now look at the 20-day average. That's only 31 lakh shares. And courtesy of this move that we have seen this week, the stock has extended its 2025 advance to over 60% after a negative performance in 2024. The week, though, has belonged to one stock, that is MobiKwik. And the stock is up 35% this week. After the exit from ADIA, the stock has only kept on moving higher. And this is the best week that the stock has had since listing. Now, after listing in December 2024, in the 37 weeks that the stock has listed, this is only the 12th instance that the stock has gained on a weekly basis. Now, the daily volume every day this week has exceeded 1 crore shares. And today, we've already had 21 crore shares change hands so far this week. Now, for today's session, almost 4 crore shares have changed hands. 20-day average is 71 lakh shares. And courtesy of this move that we have seen this week, it has trimmed the losses from its post-listing high. At the start of the week was around 70%. It's now trimmed that to around 58%. A stock that Prashant highlighted this morning, Moschip, is up 42% this week. This is the best since June of 2024. There's 1 crore plus share volumes on 4 out of the 5 days this week. And this week has already seen more than 12 crore shares that have changed hands, which is the most on record. And in today's session itself, we have already had almost 3.5 crore shares change hands. And the 20-day average comes up to around 40 lakh shares. The turnover in yesterday's session for Moschip was over 1,000 crore rupees, which is almost what? Around about 4,500 crore market cap and a 1,000 crore turnover seen yesterday. And lastly, Apollo Micro on the list today, 21% higher this week. And this is the 5th straight weekly advance that the stock has seen. It's down today, but in the last 5 weeks, the stock is up 85%. From levels of 170 odd, the stock is now up 310 rupees. And 10 crore shares have changed hands every week in the last 3 weeks. And this week has already seen 20 crore shares change hands, which is the highest since June. And today's session, surprisingly and interestingly, 1.8 crore shares changing hands. It's below the 20-day average of 2.2 crore shares. It shows the heightened activity that the stock has seen over the last 5 weeks. That's Apollo Micro for you.
My God, stock gains ranging from 21% to 42%. Who says this is a quiet market? Hormaz, thank you so much. These are weekly gainers that we are talking about. Well, with that, let's go on and welcome in our next guest on the show. Our Alpha manager, Tushar Pradhan, director at Hexagon Partners, is with us. Tushar, thank you so much for joining in. So everyone's asking that same question since yesterday, right? You've got this big GST cut, reform delivered. You have a 7.8% first quarter GDP print. CAD is coming down. The RBI has been fairly generous. Yet the market at the Nifty level remains where it is. What will it take for the market to make an up move? Your thoughts?
Yeah, I think one of the situations that always confront us is that the market doesn't behave the way that we want it to. It has its own mind, really. But here, when we talk about the market and its ability to move from here, there are two aspects that we have to consider. One is that what are the valuations that most of the companies are trading at, which make up the index? And what is the kind of earnings growth that one can expect from here to justify those valuations? So clearly, from a longer term average perspective, the Nifty is trading still higher than its average multiple. The mid cap and the small cap indexes are actually much, much higher than their average multiples. And the delivery in earnings growth, especially for the mid cap index, has been pretty strong. So it's been trailing 12 months, 21% earnings growth, which kind of justifies its 31 times multiple. But look at the 500. The Nifty 500 has delivered only 7% trailing 12 month. And if you look at the large caps, they've actually not even been very low single digit as well. So I think that's really where the problem is. So no matter what the macro news can be, till the bottom-up earnings momentum starts to pick up, I don't think the market is going to make any move. And I think for that, we need to work and wait for the next couple of quarters.
There's a discernible shift towards consumption, particularly in that auto has been picked out as a favorite. Have you also aligned your portfolio pro-consumption, consumer durables, staples maybe, auto stocks in particular? How has your portfolio changed in the last 1 month in anticipation of the GST reforms, and what's come through?
So I think on consumption, especially on FMCG per se, we are not very excited no matter what is going to happen, because even if there is a change in terms of the volumes, the valuation at which all of these companies trade at are really not exciting from our perspective. When it comes to auto and especially auto ancillaries, I think there is enough excitement there. So we definitely have changed our portfolios to kind of reflect that sort of anticipated consumption coming in. However, the end game is not really very visible. I'll tell you why. Because when we talk of a reduction on GST, there is clearly going to be an increase in demand. But will that translate into something substantial and say multi-year from a structural perspective? That remains to be seen. So there might be a blip, there may be a Diwali dhamaka as they call it, and there may be a surge in bookings, etc. And that's good enough from a sentiment perspective, but I think it also means that we need to be pretty circumspect about what you add and what not to. From that perspective, I think auto looks pretty exciting, and not only the OEs, but I think the ancillary chain is something that we are very interested in at this time.
Hi, good afternoon. Good to see you in. What about the worries with regard to the state finances taking a bit of a pullback? Because GST cut, everyone is celebrating. The center's revenue may not get impacted too much. But at the state level, that could impact various companies, particularly those that are heavily dependent. Do you see that as a worry? And do you see it maybe as uncertain for the next few months at least, which in turn could impact some of these companies?
I don't see how much that will have an impact, because the state finances are clearly something between the center and the state that they will have to work them out. There will be probably a larger share that the states will get from now on because of the benefit which is going away to its treasury. But I think that's not something that companies need to be worried about at this time. I think it's very positive to understand that the whole GST structure has become simplified. I think that is something of a long-standing demand across all manufacturers, where the complexity of the system itself was driving people to the ground. I think the simplicity is something which is going to really take off. And I think going forward, that is something to focus on rather than any dip in the state collection, etc.
Okay, got it. Tushar, but are you in the camp that believes that the single biggest sentiment driver, or the one that can bring back the animal spirits, will be some kind of a resolution on Trump's tariffs? Because in the last 7 days, we've got a good GDP print. We've got this GST bonanza as well, which will be structural in nature. But the market is still, very, very nervous. Earnings obviously will drive everything else. But do you think that will be the big trigger that could see the market yet again get on its way up?
I think so, very much so. Because what you see is that the market always are in the interim driven by news and sentiment. And I think currently the sentiment and the news are bad, given what the headlines are and what we see, largely in our faces. But what is happening on the ground is essentially a change from a macro perspective for a significantly better future. So we are talking about increased momentum in demand. We are talking about rationalization, which is going to be beneficial for a company from a long-term perspective. We are also talking about the surprising level of GDP, which has just been printed in the near quarter. We are talking about an RBI, which is very, very cooperative, I would say, in a sense, allowing for liquidity to ensure that the growth continues. So that's happening on the ground. But actually what's happening on the face of it is all this bad news about the tariff and all the impact and the kind of sentiment attached to it. So if there's any change, and this is really where you hit the nail on the head, that if there is any change, either in the stance that the US currently is taking or an allowance for some kind of in-between, middle ground, then I would think that that will be a tremendous boost for sentiment and it'll change the entire picture altogether. And suddenly all of the things that we talk about which are being ignored will not remain ignored. So for a long time, I think, the news has been pretty depressing. And if there is any change in the news per se, I think we are in for a pretty significant up move from there.
Okay, all right, Tushar, good to see you in. Thanks a lot for joining in. We'll wait by. Hopefully, there'll be some kind of a movement. Mr. Trump goes a little bit easy, because that seems to be the sentiment driver. Numbers are mattering less, but I think the sentiment driver is definitely what Mr. Trump is going to do next. Slip in a short break, come back. We'll get you some buy and sell ideas. We'll also tell you about what's going on in the F&O market.
Welcome back. Absolutely unchanged on the Nifty now. There's one stock, though, which is doing very well, and that is Industars. The news is that the promoter of the company, Bharti Airtel, has acquired about 69 lakh shares in Industars via the open market purchase. This happened towards the end of August and early part of September. It amounts to about 0.25% in terms of the overall stake increase. But the news is positive because the promoter is buying anyway signals confidence. 2, the stock has fallen a lot. The all-time high on Industars was 499. Current market price is 338, which means a fall of about 32%. And if you remember earlier this week, the stock had fallen when Industars announced its foray into Africa. And at that time, Citi wrote a report. They're saying, in our analysis, the bear case on Industars is 300 rupees. The stock today is not very far from that at 338, which means the downside from here is fairly limited. Brokerages are bullish, so whether it was Citi at 460, CLSA at 520, even Ambit wrote a note today. That's the Ambit note which came today. And they also say all these concerns, risks are overblown. Industars, to their mind, has the best risk reward, the best play in telecom right now, and their target price is 525. And there are 2 triggers to look forward to, and both are, 2 triggers to look forward to. One is reinstatement of dividend, and 2, what happens on Vodafone Idea. And if there is any relief, there will be that rub-off impact on Industars. But the news for the day is that the NSE findings show that the promoter of the company, Bharti Airtel, has acquired about 0.25% stake via open market purchases. So that's just infused some confidence in the stock today.
I don't think the Idea and the Indus move is related, right? Because if Idea sort of finds itself in a better position, usually people bid up Indus as well. But I don't think it works the other way around because obviously, right? I mean, Idea is a going concern, tendency, etc. for Idea's towers. But I'm not sure if it works the other way. I'm not sure what's happening with Idea per se, that is Vodafone Idea, because that is up about 8-9% as well. as we speak right now.
But you know, it could always be read, right? Like if the promoters are confident about Indus Stars and the valuation at here, perhaps again they're confident that Vodafone Idea is going to be in a stronger position. So that's another way to bid up if you have to. Then
but
I mean, you can make the case,
one is
right?
a Bharti company, the other is but yeah. I mean,
you can make the argument.
Make the argument. All right. Well, let's just talk about insurance, right? We were yesterday, of course, focused on life insurance, general insurance. We spoke about health, but what about motor insurance? Yash has been working the phones trying to understand what the impact of the GST sort of changes are on the motor segment. Yash, what are you picking up?
Well, Prashant, yesterday we spoke about the direct impact when it comes to, you know, the GST on health insurance being exempted and how it will increase the cost for various general as well as health insurance companies on every policy they sell. The increase in cost, as we had reported yesterday, was expected to be about 5 to 7%. Now, today, what we've been given to understand, what we understand from industry, is that the other large segment, which is motor insurance, will also have an impact on various general insurance companies. This is an indirect impact, but a big enough impact to talk about. Essentially, GST on cars has been reduced from 28 to 18%. Now, what this is expected to do is it's expected to bring down the insured declared value on which motor insurance premium is decided. So, for example, just giving some numbers, if the price of the car is about 12 lakh rupees, with a reduction of GST from 28 to 18%, if the price of the car comes down to 10 lakh rupees, then in that case, the insured declared value or IDV also comes down from 10 lakh 80,000 to 9 lakh rupees, which means the premium which was earlier 10,000 rupees could come down to about 9,000 rupees, it directly flowing in that proportional way. What this means is that it could reduce the premium income for various general insurance companies when it comes to the motor segment. Now, it's a big enough segment. For ICICI Lombard, motor forms nearly 40% of the total business. New India is about 30% of the total business. So, of course, on the health side, we were reporting how the costs could increase for general and health insurance companies. Today, it's a indirect or a second layer impact where the premium income coming from motor could reduce by about 7% because of the GST cut which has been announced on cars.
All right. Thanks very much, Yash, for that. That is the motor companies and motor segments within many of the listed companies which are in focus there. Mayuresh Joshi is with us. He's Director of Research at Mark Smith India. Mayuresh, good to have you with us here. We were just talking about Indus. We were just referring to Idea as well. Any thoughts on what's going on? Price action today?
Afternoon, Prashant. No, I think the promoter buying stake in Indus Stars is something which has propped the stock up. But again, 2-3 key reasons. One, I think the entry into the African markets, it's a hyper-competitive market. And therefore, I think how are they going to place themselves is going to be extremely critical in that aspect. The second element, obviously, is on the core domestic business itself. With its anchor investors fairly, I think, penetrated in key markets, I think the tenancy ratios are going to remain more or less around the same levels that they are at. And therefore, I think an exponential increase in tenancy ratios, specifically from the telecom part of the business, seems unlikely. On the industrial part of the business, obviously, I think there is expectations of steady state growth expected to happen. The third aspect, obviously, I think that the street was probably a tad bit worried in terms of the capex that they have, in terms of their outlay. What probably happens in terms of the overall cash flows and therefore dividend payouts, at least from a near short-term perspective. And therefore, I think putting all these context in perspective, when even looking at the ratings and rankings that we have at Markets with India, our own sense is that we will be better off waiting for Q2 numbers, seeing what the management commentary is and take a call. Till that point of time, I think largely neutral on Indus.
Mayuresh, if you want to play M&M, but now M&M has run up so much, what's the best ancillary play to M&M, which is a company which caters the most to Mahindra and Mahindra, which one could look at if you want to play this entire recovery and the strength in M&M?
So in no particular fashion related to M&M, but I think within auto ancillaries, I think one of the stocks that we are liking at Markets with India is SJS Enterprises and Uno Minda both. Our sense is that Uno Minda in particular, I think where they've got a very diverse product portfolio, right from switchgears, seatings, you've got acoustic horns, and the content per vehicle expected to go significantly higher, specifically looking at the new EV technological platforms. Again, from a balance sheet perspective, with input costs stabilizing for most auto ancillaries, EBITDA margins are expected to inch higher. And therefore, Uno Minda's margins at 10.5% can definitely move higher. The expectations from a debt perspective, the leverage on the balance sheet with debt equity at 0.34 times is comfortably placed, and SGS as well. So I think these two ancillaries are something.
Yeah. No, absolutely. Mayuresh, we have the big interview coming up. Network 18's Managing Director, Rahul Joshi, in conversation with Finance Minister Nirmala Sitharaman should be, I think we can cut across to it now.
Nirmala ji, thank you so much for giving us this exclusive interview, one of your first to any media outlet. This is after this monumental, historic decision of GST rationalization. In many ways, GST 2, the second coming, there has been a lot of talk in the past. Let me begin with a broader question. From the Prime Minister's vision of making life easy for the common man, of, reducing the burden on the common man. You did it in your budget last time by cutting the income tax rate, a bonanza for the middle class. What was the vision behind this? What did the Prime Minister tell you? How did it come about?
Thank you very much for giving me this opportunity to interact soon after this major reform measure has been approved by the Council. And I thank every one of the ministers who've attended the meeting, the states, the finance ministers, and supported it. Otherwise, it wouldn't have come to see the light of the day. Well, the Prime Minister did announce it from the red. But even about 8 months ago, he called me once and had a long talk about how GST can be, revamped, looked at, and only from one point of view. He said, look, both from the point of view of the process and also for the common man, the tax rates, is there a way in which we can make it simpler? So I had agreed that I will go into it and come back to him. Then around the budget, when we were talking about many, tax-related issues, he reminded me about the work which has got to be done. And I assured him again that time that yes, the work is progressing and I'll come back to him. So sometime after the budget session was over of the Parliament, I said I'm somewhere close to giving him a proposal, which he can guide me further and so on. And then a bit later, much later, because the developments of May, April, when Operation Sindoor had happened, and after April, priorities have been on very many different grounds. And when next opportunity came, I went, gave him a detailed description. Is that I just want, as I said at the first meeting, the simplistic or simplified, not simplistic, simplified way of doing business. So I don't want small businesses sitting at the computer, getting the auditor to do it. And also, like the way we did in the budget, respecting the middle class, respecting the taxpayer, respecting people who are really the ones out of their salaries giving the tax. We need to do something for the day-to-day indirect tax, which falls on every Indian citizen in some way or the other. So this tax is something which touches the lives of every citizen, and therefore we need to be a lot more sensitive. So I went back with this comment, redid it, sharp focused it, and that's how this proposal came. And we, for the first time in GST's history, Council's history, the centre has come up with a proposal. Till now, it used to be the group of ministers which consisted only of state ministers. Never has the centre been a part of any GOM. This is the first time, both in the case of the compensation cess, where the MOS finance, central government, was the chair to decide how to handle the closure of the compensation cess, and a comprehensive proposal as regards GST being given by the central government. So it's unique in very many ways. Every rule of the House, of the Council, had to be looked at afresh, even to put the proposal. So I'm glad it went through the whole grind, didn't ignore any rule or expectation or the law of the GST, and has gone through.
And taking everyone along, unanimously.
That's right.
At the heart of this is obviously, the common man. In fact, Money Control had put out a tweet saying that how it also impacts, it is the health of every citizen in India, to which the Prime Minister, in fact, said that it is also to do with Swasth Bharat.
Yes.
So what was the driving motivation, behind this bill?
See, I had to do a dredging kind of an exercise.
Yes.
Where every item which comes under the GST, goods or services, had to be looked at, not just by their codes, not just by their names, but to regroup them from the point of view of daily use items, that which is consumed by citizens, middle class, the poor in particular, and then you looked at those which are going to hit the farmers, those which are going to hit the middle class, and so on. Because eventually, daily use items or items which are necessary for this transition of India from a emerging, developing economy to a Vikasit Bharat cannot be on the back of, just the approach of we need more development, bridges, roads, some contracts for works and so on, but also that the aspirations of the growing families will have to be met. So we had to regroup them in such a way, okay, this is essential for, let's say, the families, poor middle class families. Of course the rich will come in. So what do we do as a treatment for it? But even as we were talking about this, we are talking about the classification of goods and services. I, without any hesitation, will bring that example of the popcorn. Why am I saying hesitation? Because I was pilloried on it.
Yes, absolutely.
But that tells you the problem of classification, where we brought in a system, no doubt, which was an improvement of over the pre-GST era, where every state defined its own and had its own rate and so on. So GST in 2017 was an improvement over what was earlier. But it still required some more simplification, and that's why this exercise. And in the case of the popcorn, it led to a lot of litigation, courts coming up with different kind of voices, and states losing revenue because of the classification being different, people chose to have the higher taxed sugary, chocolatey popcorn shown in as a salted popcorn, because that has only very little tax on it. So this arbitrage, because of classification, had to be overcome. So even as I'm grouping for families, their day-to-day items, this thought of what the classification is causing as a problem also had to be addressed. Like that, I think it was one of the, for me it was a fascinating exercise. It was rigorous, it took a lot of my time and time which would have gone in for something else. But I think this was absolutely rewarding an exercise, because you brought in that temperament, which is so important, that citizen looks at these things in one particular way. Revenue is not the consideration. So that helped us.
So now that you've done two monumental things, you've put more money into the hands of the consumer, you brought down for the middle classes the income tax cut, and now rationalization of GST. So will it now finally sort of move the needle on consumption?
100%. Because there's more money given already. through the income tax cut. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
That's right.
There's nothing beyond. So that 1% is what makes for the demerit goods, which popular parlance says sin goods.
Yeah.
So that is the extent to which we have cleansed the system of anomalies, doubts, duplications, and any interpretative issues.
So this will also lead to higher investments. It will fire up investments as well.
Obviously, with consumption going up, there's a potential for capacities to grow, investments to grow.
Now the combined tax revenue impact of this, earlier your income tax cuts, and this is about 1.2 lakh crore. Do you think that there will be a certain revenue buoyancy as well in the coming years to make up for this? And
every economic theory that one studies says that.
Yeah, have you seen that in the past?
Well, at least the moment the income tax reduction happened, you heard people very clearly coming out and saying, I've met up with a lot of individuals coming from different strata of the society saying, I'll have more money to send my son to this particular college. My daughter is already doing engineering. I'll be able to fund her for her higher studies and things like that. And from ordinary citizens who are leading their lives either working in a small store or driving a car, taxi, and so on. So it has an immediate psychological effect that I can do this, which was beyond my affordability. And therefore, I think there will be a buoyancy in terms of revenue.
Any impact on capital spending or fiscal deficit?
I wouldn't think. At this moment, I can say with confidence, capital expenditure of the government will not come down. It will be completed as is stated in the budgetary planning time, the budget estimate time, and so with the fiscal deficit. And this is the last point of my gliding path. Right. I will adhere to it.
Will petroleum products and alcohol continue to be outside the ambit of GST?
Yes, the current proposal doesn't include it. Right. The states will have to.
And you don't see that happening in the near future?
Not in the immediate future.
Okay. Let's move, to a few broader economic questions as well. With GST rationalization, inflation is likely to come down quite naturally. Does it make a case for further repo rate cuts in the future? I know it's not your, but generally, directionally speaking.
Not my domain. We'll have to see how the RBI assesses for itself.
September 22nd is a tight deadline. Are you confident you'll be able to roll this? Is the back end ready?
Yes, the back end was mentally prepared, and many structural things have already started getting corrected, reset, and so on. It is with the agreement of these GSTN related technology managing team related issues that we have had a discussion with them, and they have clearly given me the confidence that yes, they will be rolling it out on September 22nd.
So Rahul Gandhi, who earlier called it Gabbar Singh tax, now has been talking about one nation, one tax. On the other hand, former Finance Minister P. Chidambaram, he said that, it is 8 years too late. How do you react to all of this?
Well, being in the opposition, I think they have to say something. When the popular response has been so overwhelming, for an opposition to try to take some credit out of it, but yet with a hesitation that the credit should not be completely given to the government is quite understandable. But I would want them to ponder that neither could they bring it in because they couldn't win the confidence of the states, nor could they truly and literally understand how the mechanism works. After all, the GST Council has members from Congress party, yes. Finance ministers from Congress ruled states are there. But I have a feeling the Congress High Command, as they call it, doesn't do its homework to understand the way in which this wonderful organization works, the GST Council. And therefore, at one point in time, they call it Gabbar Singh tax, another point in time saying, oh, this is fine, but it should have come earlier. These are clearly statements coming from people who have not really spent time to understand how post-independence, that one institution which has been created, a constitutional body, if I'm right, this is the only one which has been created post-independence.
Yes.
Is spent 8 years, but has delivered so much in terms of revenue, in terms of uniting this country, in terms of making ease of doing business a reality, and is now coming up quickly in succession within 8 years with the second generation reforms. To understand it and then to comment would help the government, not stray comments which doesn't get into the details.
Nirmala ji, this has been widely hailed as one of the dramatic reforms of this government. Obviously, a dil mange more. So,